Allied Solutions is happy to welcome and talk with long-standing preferred partner Kasasa. Kasasa offers solutions to Allied clients that drive strategically significant low-cost core deposits and high consumer engagement through their real checking system and take-back loan. Joining me today from Kasasa is Alisha Crafton, Chief Growth Officer. Welcome, Alisha, and thank you for joining us today.
Thank you so much for having me. I'm excited to be here.
Yeah, of course. A little bit about Alisha Crafton. Alisha is a results-oriented ALM certified community banking advocate with almost 20 years of industry experience. Her passion is helping the 600 plus Kasasa partners achieve real sustainable growth regardless of what the economy throws at them. A fun fact about Alisha is she ran the last 3 miles of a marathon, a total of 26.2 miles, folks, with double stress fractures in both of her legs. This whatever it takes, grit, tenacity, and won't stop attitude is the same dedication she brings to her team and clients every day. Alisha, that sounds painful. So I have to ask, were you just running on adrenaline, endorphins, and determination at that point?
I think it was more the latter, the determination. I think at that point in the race, all the endorphins had worn off.
Yeah.
No, I had made a commitment to myself and to my kids that I was going to finish it. And so there was nothing that was going to allow me to do that. It slowed my time way, way, way down, but it was good. We got it done.
You finished. Yeah, that's the main thing. Good for you. Good for you. I hope you had lots of ice on your legs after that.
I did. That's the last marathon I ever ran.
All right. Well, let's dive right in and learn more. So, Alisha, knowing that Kasasa works with hundreds of institutions across the country and with data, analytics, and consumer research being your expertise, what are you seeing in today's economic environment?
Yeah. So, Amy, one of the things that we did recently is we actually did an analysis of call report data going over the last 5 consecutive quarters for FDIC NCUA data based on people who don't partner with us and those that did. And what we found was pretty interesting. One of the things that we found is overall institutions that don't partner with us have lost about 56 basis points of total demand deposits. Some of that is runoff from COVID. Some of that is consumer spending. Some of that is people like Apple, Goldman Sachs, right, coming together and within 3.5 months soaking up $10 billion in deposits, right, with a click of a button. And so what's interesting is when you hear 56 basis points of deposit runoff, you don't think that's a lot, but it actually represents over $2 trillion leaving community institutions altogether. And then what are they doing? Well, when we go to banking school, we're taught plug that hole with a CD special, plug it with savings accounts, money markets, right? So while CDs have their asset liability place, they're very expensive. So in that same time period, we actually saw a 117% increase in CD volume, which made cost of funds go up over 200 basis points for most institutions. Now, if we compare that to what our clients saw, our clients actually grew 5 times more. So over 4.11% with 2/3 less reliance on CDs and a 30% lower cost. So if you think about it, everybody else was shrinking. Our clients were growing, using CDs less, and at a 30% lower cost. So pretty substantial.
Yeah, those are some really impressive numbers. So thank you for running through those for us. What do you think has contributed to the success of Kasasa clients versus the rest of the industry? And how does that compare to other checking solutions?
Yeah, so when we talk about the kind of growth that our clients saw, right, that 4.11%, it's important to know, like, you can grow by doing borrowings, you can do CD specials, you can do all these different things. So it's not actual growth or real growth if it's not sustainable, if it's not profitable, if they're not highly engaged. And so what's really important to understand about how our clients grew that is they used, checking and savings accounts in a really different strategic way, right? And by doing that, if you think about how is that different than a different partner, the clients were able to grow those deposits, but they were sticky, core, highly engaged. So when we define what is real growth, how is that different than other things that are out there? One, it's an asset liability play. It's not just put a checking account out there where they can get some features or some benefits or a gimmicky offer that gets somebody in the door but doesn't create, ongoing engagement. What we're doing is we're giving a win-win situation to the institution and to the consumer. So the consumer gets, a high rate or cash back or something that they really want, but the institution is getting high levels of engagement, to the tune of 45% more non-interest income, 6 times higher average balances, practices and 30% lower run rates. So when you think about people leaving, they're lowering that attrition. So it is really a win for everybody.
Yeah, it definitely, I mean, you can't really argue against those numbers for sure. So on the flip side, though, why would institutions want to partner with you versus trying to continue with their current system or create a DIY version with their core?
Yeah, we've had the first short answer is speed to market. So there's a lot of
Hmm.
institutions that are talking to us that a year ago thought about building their own product and it's still in process, right? I just talked to a credit union this morning that has been trying to have their core help them build it and they can't get a call back, you know? So when you think about speed to market, we can go to market within 45 to 90 days, all the way end to end. And the other part is it's a science. If you really want results, you really want to solve the problem, not just in a short frame, but you have to be able to create long-term results. And our approach is really unique because we're the only experts in all three domains that you need to drive that real growth. We need something that we know is valuable to consumers and it's engineered to create and drive behavior in a way that benefits you as an institution. There's also value for the institution in aligning that product design with their strategic objectives. It's not, this set it and forget it where you can just copy and paste it. I see institutions do that and then they end up coming to us anyway because it didn't work and they think the product broke. But it's actually, there's a lot of tweaks that need to go into that design to make it effective. And then we have to make sure that it's both easy for the institution and the consumer to interact with. And after doing this for 20 years, we have over 600 institutions that trust us. Currently, today, we power over $20 billion in deposits, and the all-in cost of those deposit dollars for our institutions is negative. It's throwing off profit, right? So when you think about that, we have hundreds of institutions over 20 years that have run experiments, each one getting best practices, right? And we get the collective knowledge to share that and give you that dedicated regional resource to make sure that it actually hits the objectives.
Well, and that go to market is so important. I mean, we live in this era of, everybody wants immediacy. And as you mentioned, even if these companies do try to build a DIY solution, oftentimes they end up coming to you anyway, and then they're that further behind. So,
Yeah,
yeah,
and
well,
sorry,
go
I was
ahead.
going to add and we actually had an institution, a very large credit union, $4 billion credit union that partnered with us. And when you put projections together, you would assume any case study I would ever share would be like, we hit them all, right? Well, what ended up happening is they outgrew their account goals. They missed on their deposit goals. And when we went back and looked at that at why, it was because there was a change in their market. There was a strategic shift in their balance sheet. They had some CDs come due. And instead of trying to cross sell those into the high yield, they just renewed them, right? And then the third thing that happened is significant staff turnover. So while their executive team was saying, hey, we want you to lead with this, their actual account opening was 50-50. So they were putting a bunch of people coming in the door in their free account, which was actually negating any deposit growth that they were bringing in. And so when our client director caught that and went on site, we did a renew of the product design. We went out, retrained their staff, and we were able to change their deposit trajectory from a negative to over 150 million of net new deposit growth at less than 2%. So when you think about it, it's not just like, can I create it? It's can I actually drive the results and have an expert that can help me tweak it and calibrate to make sure it's sustainable.
Yeah, absolutely. Just having the right partner to come in and do what you specialize in and just take that piece and just do what you do, take it off their plate. They don't even have to worry about it. So, yeah, that's great. And one of the questions that's been asked frequently over the years is, do clients have to use the Kasasa brand? And can you elaborate on why someone would want to? And if they don't want to use your brand, can they still partner with you?
Great question. That short answer is no. They don't have to use the Kasasa brand. I know for years that was something that we required. What I'll tell you is over this last year, that's a shift that we made. And here's why we did it. There are still over 500 institutions that partner with us that call their accounts Kasasa. But there are other partners that work with us that say, you know what, for whatever reason, for a rebrand or competitive reasons, they don't want to use that brand. So what I'll tell you is there's usually a couple different reasons why somebody would do that. If somebody doesn't want to call it Kasasa, they don't want to use that brand, they still get access to all the same resources that we use in terms of the products, the consulting, the marketing support and services. But the difference around it is that they really want their brand to be present. A lot of these institutions tend to have very savvy marketing teams. Maybe they've just done a rebrand. Maybe they're really sensitive to that and they would be more conservative in that. Institutions that really love the Kasasa brand and have thrived and have gone all in are ones that want something that's really disruptive. It doesn't look like anything that they've ever done at their institution. And they want to be part of something like we did an event in November of last year called Best Day Ever, where we had hundreds of institutions go out and do random acts of kindness in their community all on the same day. That got local media, national media pickup. We got a social media influencer, right? But there's a specific type of institution who gravitates towards co-opetition. There's others that don't. And our focus is helping all community institutions to be successful. And so we didn't want to create that division by not allowing that flexibility. So no, you do not have to name it Kasasa, and you still get to partner with us and get great results.
Yeah, that's great. It's not a one size fits all solution at all.
That's right.
All right. So in a competitive deposit and lending landscape, how do you plan to maintain a competitive edge and continue attracting new customers? Or said another way, what innovation are you most excited about at Kasasa?
Yeah, so I am really excited about some changes that we've made in digital onboarding, both in our reward platform as well as our take back loan. So one of the biggest breakthroughs we got was getting take back loans on core. That now is we have core integration with Fiserv, DNA, Scimitar, COCC. And what that allows us to do is completely unlock a new digital onboarding journey as well for the reward side. So what that means is instead of today where a consumer comes in, they get to select the reward that's most meaningful, the account holder puts them in that. We are now engaging through an opportunity where the consumer via text message and mobile banking for the institution, it's their experience, gets to pick the reward that's most meaningful to them. They get to see their dashboard. They get to see, how are they progressing towards that? They can switch with a click of a button, any reward at any time that they want to. And that experience is really creating an opportunity to also cross-sell some additional non-interest income products. And then on the take back loan, this product has been so incredible, Amy, and it's a game changer. Our biggest challenge was always institutions loved it, consumers loved it, back office hated it because it wasn't core integrated. So now that we have solved that problem, what we've actually found is that take back loan, those people who have that loan have higher average balances, a higher propensity to attach a checking account, and there's about a 4-minute user experience inside the institution's mobile banking experience. So you get an engaged consumer. So these two pieces coming together are creating a lot of deposit growth, a lot of competitive advantage for our institutions. So that is what I'm most excited about, I think, as we focus this year on scaling that across our client base and the prospect universe.
Yeah, it sounds like a lot of synergies for sure across the board on that one. So I can see why you're excited. And keeping the back office happy.
Yes, that's
icing on the cake. Right,
yes,
right.
Yes.
All right. Well, this has been such an informative conversation. It's been really fun to talk to you. Thank you for sharing more about Kasasa's real checking system enhancements and the newly core integrated take back loan.
Yes. Great. Thank you. I really appreciate you having me. This was great.
If a credit union or bank would like to learn more about Kasasa and how they can help drive strategically significant low-cost core deposits, decrease delinquency, and drive real engagement, reach out to your Allied Solutions rep.